Okay, so I'm going to go over some volume profiles. So four main profiles here: P, B, D, double D, or capital B, whatever you want to call it. So obviously these are distributions of what the volume profile looks like. So if we look at P, we'll be looking at low volume profiles and then a high volume profile at the top, right? Big distribution of volume, small distribution of volume. Standard P profile, you'd have your profile looking like that if you were on TV or something at the end. We'll go over why it looks like that and what those bits are soon. Generally what you'll see for these being made on like an intraday stock would be this. So you'd have your bull flag, either bull flag or distribution at the top. You can find out which one it is. When we look at one of the charts later on, that's what the candles will look like in an intraday chart. Same with a B, obviously the inverse. So generally bear flag or accumulation. You've got your main D, which is generally just a chop day, which we see quite a lot in indices. Just a range trading day, not really much fun, unless you're just scalping top to bottom. Or we got our double D, which would be this kind of deal. Obviously it could be the inverse of that as well, where we go like this. And obviously the volume spread is top and bottom. So it's kind of like having two of the Ds with a movement in the middle where you've got lower volume in this area, as you can see in the B or in the double D, whatever you want to call it. So those are the four main things, and if you look at some of the indices, you'll be able to see things like that. Generally, when we're looking at them, there's a couple of things in the volume profiles that we want to know about. So we'll remove this just now. And if we look at the actual profile and how it looks on a screen, if we look at a standard D profile, obviously they don't generally look quite so symmetrical as this, but that's just what we're going to have to deal with for now, because that's all I can draw. You'll have areas like this, and you'll have, let me use a color, and you'll have a line going like this, right? So if you're using TradingView or something like that, you'll have area here and an area here which is faded. And the reason it's faded and the reason this bit is not faded, or in bold we'll write because it's easier to write not faded, is for two different reasons, right? So your faded area is outside of value, right? So generally that would be up volume or down volume. Outside of the value area, obviously that means that this is your value area. You'll have this cut point, and this cut point is your VAH, your VAL, so value area high, value area low. Generally that means that this area is where there's good value. This is where most of the trade's been taken on that day, most of the volume has been shared, bought and distributed, so that's the fair value in that day. Obviously the most fair value in that is the highest volume node, which is this bit here, which is VPOC. VPOC's a really interesting concept, and we'll look at it a bit later on. And there's different ways of obviously using this, and we'll go through two different options of what we look for in volume profiles and where we can use them. And I did, when I recorded the first time, do a live trade, but I had to re-record it because my dog was barking. So that's what we're doing just now. But I can go back and look at some of the trades I took on Friday using this, and we can look at ones I was posting about as well over the week and what we were trying to look for. But what we're going to go through first is using different kinds of volume profiles, right? So, oh, that's a post-it. No, that's not what I wanted. Get out of here. Delete that. Right, okay. Let's remove this. You can obviously just screenshot those bits if you need to work out what I'm doing. I might as well just delete that title because I've now just ruined it. Right, here we go. So two different things we'll be using volume profiles for. So one of which is swings or main charts, so high time frames. Another one is day trading. Right, so they're the two things we'll look for. The first thing I want to talk about is this thing that everyone uses that you see on Twitter and shit, visible range, right? So this is something I want you to try your best to avoid. So you don't want to be doing this. What I mean by visible range is you've got your chart, and you've got whatever's happened on that time. You have no reason where it started or ended unless you fix those dates. If you fix those dates, that's fine. And you can have over the last year or since this day or in this month or whatever it is, if you set your start and end of your chart to those dates, then you can stick a visible range on it and you'll see what's happened in that time. The problem with that is that not all the time during this year has it been doing stuff that we're interested in and where real money and real volume's been involved, in which case it can actually skew our visible range. So you'd be having something like this on your chart as your volume profile over here. So loads of volume down in this bottom bit, a little bit distribution at the top, and not much going on in here in this area. And it's not all that helpful, is it? Because we can kind of work that out from the chart, because we can see from that chart that had two accumulation phases at the bottom and distribution phase at the top. So we could have guessed it was going to be high volume at the top and high volume at the bottom, and not much in between. Right, so visible range, what a lot of people do, there's problems, and we'll see that when we'll look at SL in a minute. We'll see that there's problems in that. But yeah, it's just something that we kind of need to learn. So the ones we want to be looking at for swings is fixed range, and this one we can use fixed range as well if you want to look at a couple of days or a week, but we're going to look at session HD, and it might be called something different on other platforms. Obviously I use TradingView, so it could just be like normal session or whatever it is on TOS or whatever charting software you decide to use. So fixed range, maybe you want to use this on impulses, and we'll go over what an impulse is soon. This one is just daily. You're going to not be able to use the daily chart, so you're going to want to use the 4 hour or less. Generally you want to get as low time frames you can. It'll make it look a bit better, have better granularity in the volume profile. Right, so those are the things we want to look at in terms of the indicators that we're using. The last thing we're going to go over is some nomenclature. We use the fancy word, don't we? So these are things I'll be talking about during this next bit that we go into. So these two are high volume node and low volume node. Right, so these are important when we're looking at the profiles, and you can understand why in a minute. So keep those two to mind. The other thing we want to look at are liquidity and imbalances. Right, so liquidity is obviously where the rest in the orders are. We want liquidity, so what we want to do for liquidity, if we've got a chart going like this, and we've got a nice little wick here, our liquidity is up above this wick. Why is the liquidity up above this wick? Is because this is where short sellers' stop losses are. So we can go in, force them to stop out, pops it up, fill their own short orders and push it down. And by we, I mean not us, I mean smart money, right? So that's what they're going to want to do. Same way if we're looking from a bullish perspective, if we've got a nice little pattern here and we've gone up, stop losses are here. So we drop it under, we fill up our own bids, and then we move higher. And that's where these structure breaks come in. And we'll talk about structure breaks in one of the previous lessons that we did. But obviously structure is its own thing. So you've got your main structure in blue, you've got a smaller time frame structure in black, and you've got an even smaller structure in red. And obviously you can go super macro with it if you want. So there's loads of mini structure breaks to fill a bigger structure break, to fill a bigger structure breaks, which generally just give you your overall chart, right? So those are things we need to look at. Imbalances, we've gone over before in a lesson. So if you're looking at candles, these are not going to be fun to draw. Right, so you've got a nice little red candle here, big red candle here, and then you've got a nice little green candle here. Your imbalance is between this wick and this wick. So candle 1, candle 3. This is your imbalance, this gap in the middle between the wicks, right? Why is this an imbalance? Because it's unfair price action. Oh, I shouldn't have written that in. That's horrible writing. That says unfair price action, right? So unfair price action, what does that mean? That means this markdown, or markup, this changing price over time was too fast to fill all the orders. That was generally because they probably pulled in here, hit everyone's stops, everyone's stops forced it to sell, sold too fast to actually catch any of the selling bids that were in here, or any selling bids that were coming in the way down. So what's left in here are resting orders. So what we generally do is we pop up, we'll tag either the bottom or the midpoint of this. Bottom will tend to try and get defended, midpoint you'll have orders. When we get that 50%, we'll then pull lowers. So you'll have this pop up and then further down, and that's where we get that structure break, right? So those are things we need to know, because we'll be looking at that when we look at a chart. So if we pull up a chart here, click somewhere on the chart over here, and we'll go back to an impulse, right? So this is what I mean by an impulse. So we're looking at this chart, you can see obviously what we've done is we're going from a low point to a high point. There's a reason for this, obviously, is because that is when there's been momentum in the stock. So we could stick on, in fact what I will do is put on another one here just for the sake of it. So if we had the whole chart up until there as our visible range, or what you'd see in a visible range chart, if we had cropped the screen to like that, as you'd see that, I've done the magnet off before I start making a mess. You see your VPOCs down here, which is not helpful because it's just in this whole range of consolidation. So there's nothing really to help you on your way up. And you would have seen that there's just nothing really noteworthy in this whole move that we've just done, because there's so much volume at the bottom. It skews what the rest of the nodes look like, and there's not enough kind of to play with and to look at. So we'll take that off. So when you're looking at this impulse, so I tend to go from the first higher low, which you can see in here, which is generally the start of the trend. I'll go from there to the top, to the peak. Obviously you don't generally know where the peak is until the peak fails, but you could have guessed this probably would have been a peak, just because look at how small the volume is up here. We've had a bearish engulfing candle on the daily. Chances are we're going to probably fall. We've got some pretty mean RSI divergence as well. So you could have drawn your impulse there, and we could have just seen what would have happened, right? So if we've made this move, there's a couple of things we're going to note down, or we're going to not note down, we're going to draw on the thing as we went through in the start. So what we talked about was VPOC, so we've got our VPOC here. So I'll just extend that line out with my own line, just for the sake of it, and just so we can see what it looks like in the future. So I'll even blend it in, make it look pretty. And then there's a couple of other things that we're going to draw. So we're going to draw this low volume node, or sorry, we'll do the high volume node first. So high volume node, a high volume node, and you're going to want your value area and your value area low, which you'll see won't help. But yeah, so this is what we need. This is what we'll be looking at in this chart, okay? So next thing we want to do is draw in our low volume areas. So we've got a really strong low volume area here. Oh, that's a funky color, I don't know how to say that. Fair enough. And we've got another one here. And we've got this tiny one down here. So these are areas where the node is noticeably smaller than the ones beside it. And you've got this up here, right? And you could probably take a good decent part of this area here because they're noticeably low volume areas, right? So they're super bold. I'm sorry, that's like psychedelic lollipop man shit, but we're using them anyway. So what would be expecting here, if we looked at this volume profile, we can see there's been a lot of shares traded down in this area here, which is understandable. We've started to move, people are FOMOing in, people are enjoying it, it's coming up on daily volume scanners, blah blah blah, and we've moved, and we've had obviously probably had news, sector rotation and whatnot at that time in FSL, and it's given us some really nice patterns. So obviously what we have in here is our major bull flag, which obviously started the second leg, and obviously that is where we have this VPOC. And that's kind of, you can notice that that's the VPOC of the move because that's where we spend the most amount of time. We've had a lot of volume in that area. It's still the starting move, so it's not just kind of continuation volume. It's the proper starting volume of the move, right? Obviously, so that's our VPOC in there. If we then see what we've done on the way up, we've flagged again, broke out, flagged again, broke out, flagged again, broke out, right? Every single one of these next flags, there's a lot less volume in the high volume area of it. So you can see there, and here, we've decreased in volume. So there's a lot less institutional, big volume players playing the ticker at the time. If we start looking at this top one, we can see that there is really not noticeable volume in this area to push it up that much higher. So what we can expect in this area here, on this node, is that this bit here was actually distribution volume. So this was actually them selling out most of their positions. Obviously probably in these wicks as well, they were selling out their positions. What they would then do would push it higher, trap some bulls to be able to flush it. With that in mind, if we're looking at what we expect the stock to do on the way back down is, we would not be treating this zone here as demand. People might be like, oh, well, this was supply. We can see the wicks here, so that'll probably be demand. This wick here that we've got in this first daily candle, that's probably all I would expect from this area. There's not volume in that box. So you can't just be like, oh, this is now supply turn demand, because some guy told me on Twitter one time, that's not how it works, right? There's got to be actually demand in that area. You've got to see it on the level 2s, you've got to see the bids there, you've got to see players in those areas. And what a lot of times happen is that people play these supply and demand boxes, and they're actually the ones that cause the demand, because there's just so many people that don't understand the concept as it really is. They just draw a square on a screen and they're like, yeah, this is now demand. So people actually play off that and they create the demand, but it's not a demand area, right? So what we'll be expecting this to do is flush through here. Once it flushes through there, what do we expect it next to do? What we'd probably look for is it to flush probably all the way through into this low volume area here. And why do we expect that? Is because this low volume area probably has resting orders in it, because the stops from this flag would have been in here, we would have picked up liquidity under there, and then we probably bounce. How far we bounce is a different question, but I'd expect probably bounced up to this high volume node. That's not drawn very well. Up to this high volume node, and then pull down from there. And where would we expect to pull down is probably to this low volume node here, with again stops, liquidity in this area. And what they're trying to do by getting into these areas here and here is to fix the structure. So bump up the volume in these profiles to meet the surrounding volume, or close enough to the surrounding volume, which fixes the structure and makes it a bit better and make sure there's not the resting orders that you need. So what we can then expect to do from probably a little bounce up, flush through into this area, I'd expect, down into these nodes, and then you'd want to start looking at these turning from your demand into supply, as they talk about on Twitter. And you'd want to play around in these areas, fill up this volume node down here, eventually retest this high, come back down and play in this area, and this is where you're kind of expecting it to bounce a bit more. So when we're looking at these really low volume areas, we're expecting it to pop a little bit further. It's not going to be the reversal of the move, and we can expect it not to be the full reversal of the move, because we've got issues down here, we've got structural issues down here, so we can expect at some point it's going to come back down. So it's not just going to take off. Sometimes they can just take off. Obviously, if you look back at like SPY or Amazon or Apple or Facebook, something like that, you're gonna see structural defects at the bottom of the chart, and it's just going to be there. But it's understandable that they were doing stuff, they were executing. This is F sell. So we'd probably expect this to come down and retest probably this area in here. So we're looking at where the high volume area starting. So these blocks of 3 here, and that would probably be a good area for it to properly bounce. Yeah. And then what we'd want it to actually see us do is to come down to this main VPOC. So VPOC of the move, back into this flag area. We want to get down there, probably take out the top again, make sure that the shorts are getting stopped, get the no shorts in, and we want to play down in these low volume nodes here. Fill in this structure, play in the area down the bottom here, and figure out what's happening in here. Because what did we say earlier is we want this B profile, and this is not a nice B profile because you've got one high volume node and you've got blanks underneath it. Well, not blanks, you've got low volume nodes underneath it. Oh, I shouldn't be deleting that. Right, so what we're going to do is just see roughly how well this works out, right? Forward, play, forward. Is that forward? Sure. Does that say? Yeah, okay. Right, so there's the flush down into that low volume. So there's our first little bounce in here, and this is what I mean. The top ones aren't going to bounce too far. So we popped up, we tested the top of the low volume area again, so the bottom of this high volume. So I probably should have drawn the outskirts of them rather than lines, but I was just keeping it neat. So you see it bounced first time there, and then what it did, there we go, there it tested the bottom of it, fell through that bottom one, we popped back up, we failed that now, so we're filling in that zone, come back down, and there we go, test VPOC, there's a bounce off VPOC, and then we're touching that low volume node there, and we got a proper bounce. So there was good resting orders in that area down below. There we go. So now we're down, we're consolidating again, we're stuck under VPOC. Just get to the end already. There we go. Right, so you can see basically from using that volume profile we were able to map this out almost exactly how it played out. And there's nothing I did that was fancy in that. It was just a case of understanding where the volume is and what they want to do with that volume and how they want to play. I wouldn't say against retail, but they want to manipulate retail orders. Delete some of these lines. So you can see how it actually played out. I probably should have made those boxes a little bit bigger on the storage, shouldn't I? You can actually see it doing stuff. Right, so this bottom volume is probably never going to get filled, and that's just how it's going to end. But that's alright because, like I said, that B profile, if you wanted to swallow out the bottom, so you're wanting this to fill out. So then if we match where we've got these low volume areas now, and if we draw, well actually instead of drawing we'll extend this impulse out to the end of the next impulse, and you can see those areas are not so noticeable anymore. So this one has been filled, this one being pretty much filled, this one's a little bit small still, a little bit weak, but it's doing better, and this one's been filled, right? So these are now areas that we can look at on the way back up for areas of weakness, right? So what we're going to do then is if we move this to the top, and this will be how we then map out how we go back up and how we play on the way back up. Right, I need to delete some of these lines. Hold on. a mess on my charts every time I do a session. No, okay, can't do that. Right, so there's our downward impulse volume profile now. So again, VPOC here, you can see that's kind of acted pretty well. You've got your low volume area in here. That's the first point that we failed. And then you've got this area here, which is a noticeable low volume node, which is where we're stuck on right now. Again, this was posted for the guys in MTA. I went through it with a couple of people, but so I'd go through it in the lesson as well. So that's why we're playing this right now, because we are actually playing this right now. And you can see how this volume profile is going to react on the way up. So what can we expect after this area, or after this current move, or into the future, back to the future, whatever. So what we'd want this to probably do is hold above this area here. So this 820 area, probably just above 826, because that's not really quite exact. Obviously they're not going to give you dead on values, right? So it's an approximation of volume. So the node's granularity is going to change, so the line will probably change a little bit. But what we can expect is to hold this area here. We'll want to eventually fill in. We're going to want to eventually fill in this area. So we're going to want to come up and fill this in. We'll probably fail off here, come back down. We'll then need to pick up demand again to push higher. We could probably get through this area. You've got lower volume in here, so we want to look to fail, or not fail. We want to look to pull in here, and this will probably be where you'd be into peak, because there's so little volume up here. This is probably just all supply just now. So that'll be where we kind of struggle to get back into. So this block up here is where you're probably looking to probably take most of your profits on any swing. This bit's just going to be horrible to try and get through. So we can play in these lower channels down here. Right, so that's how we can use volume profile to work out how a swing might react, where we could possibly find bounces. I know quite a lot of people use these certain strategies where they're like, oh, it's been X number of candles on the way down, so it's got to bounce here. That's a lie. It does not have to bounce there. And that's not a strategy counting candles, right? Find a way to actually make it work and look at those nodes. So go through a couple of examples of it working. So bring up my Bitcoin chart here, and this was one, you'd have seen me post about it. It was on Twitter, it was in MTA. I was covering the place in Bitcoin nonsense, but shit happens, right? So we'll turn off a couple of these things, and we'll take off my RSI as well. So what we were looking at on Bitcoin, right, was this profile here. So there was two noticeable areas of, hold on, I've extended that. Right, so let's look at the actual impulse. Here we go. So noticeable areas of support. Here we go. Right, so where did we want this to hold? I've got fib stuck on there as well. Damn, so much analysis. Right. Probably should have cleaned my chart before I did this, you know. Right, so we've lost and failed this area here. Turn that back off. Once we've lost this area here, you would have seen a lot of people being like, oh, daily demand zone. We're under it, it's not going to bounce, this is probably a death, we'll probably come down, retest 40, blah blah blah. Yes, we might eventually come down, retest 40, but we're going to bounce. Where are we going to bounce? We're going to bounce where the orders aren't filled. So you've got this area and, oops, what have I done? Go back, not yes. There we go, Bitcoin. Right, so this area in here is probably where we'll bounce next. These areas in here where we're looking at bouncing, as you can see, that's why they're mapped out. So I've got green around this one. So we've got the low volume area, we've got this one. So as I said earlier on with the impulses, you're probably going to want to slice through this low volume node, pick up liquidity in a slightly better node, and come back up into the low volume node to look for the top of it, and then fill in some of that structural issue in that low volume node. So what did we do? We came back down, we almost bottom ticked exactly where I drew a line at the bottom of this slightly higher volume node. Bear in mind though that this is still a low volume node. Both of these are low volume nodes. You could have just drawn, if you really wanted to, like we did on the last one, you could have drawn your nice fancy little box, psychedelic yellow box, and you could have guessed exactly almost where it was going to bounce. Right, and what did it do? It bounced, came back up, and so far it's tested the top of that box almost to the tick as well, as you can see in there. Right, so that's how we can work out where things are going to bounce. Obviously we weren't actually playing Bitcoin, we were playing miners, which is why they're up on my screen. So obviously you can see we were buying in here because pretty much because I said this is probably the bottom on Bitcoin, so we were buying in here, and you can see obviously we made a decent amount of money on a 1 day swing. I think that was my average, so about 15% on HUT. I also played CAN, which had a very good movement as well, as you can see, and I played NCTY, which didn't quite move as far as I thought, but there's other reasons why I was playing that, as you can see. So Bitcoin, so that was the general idea of where we're wanting it to bounce. If we then look down on the smaller time frame charts, get rid of this ridiculous box. Oh, that's not it. That's not it either. Oh, come on. Help me out. Just want to delete the box. This is annoying. Let's get rid of this nonsense. There we go. Right. So what we were looking for it to do. We came down, we bottom ticked, almost, we bounced back up, blah blah blah. We went through that. So the other one we were going to look at was our session volume. So I'm going to start with the session volume on this, and I'll go on to what I normally use it for, right? So what we were looking for in the morning, actually I don't know if I can replay them. Probably can't, right? Anyway, so when we bounced, we were looking for low volume area to bounce back down to retest, and we didn't want to fail these lows here. So we didn't want to fail this bottom volume and go back into the excess, which we did, and we held, ripped all the way through what that low volume node was, because we'd taken out the rest and sell orders. We ripped all the way up into these areas, pulled back down. We then turned that into demand. So that's your supply demand turn. It's not because there was a box here that someone drew once and then there's a box here. This is an actually well done box. The box is sensible, the box is there for a reason. The box is there because there's low volume nodes in here, right? So it was a bit bigger, it's now that size. If you drew those low volume nodes in, you've pretty much bottom ticked this bounce, and we can go up, we'd fail these. We're looking at this low volume area in here, which obviously is where we stopped next. We've then got this low volume area in here from the day before, which is where we're consolidating and filling out structure. So what you can see, if we turn off the candles, which I normally do, is that we here are filling in this area here, right? So if you look at where the dotted lines go when I'm hovering around here, we're filling in this node here, filling in this bottom volume. We've left a little bit in here and we're filling in here. So we'll probably need to fill in this little bit here to fill in this structure. And when we fill in that structure, then we can make a look for higher volume areas where there's structural defects. So we've got small imbalances in here, and this is obviously filling out. So what we had on the way down here was what we call a balance. So this was your balance. So this was a structural defect. We filled in the structural defect. We filled in the rest of it, and then we dropped. We fill out the balance. And what we're going to try and do is fill in any more structural defects, and then we're going to try and drop and re-pick up more demand, probably in that bottom order zone. So when they come down and they pick up this liquidity, what do we expect them to do is to take it back up, to fill in any other bits, and they fill this in by accumulating here and distributing in whatever the other structural area is, and then they can fill out that volume profile so it looks like what they want it to look, right? It looks like it's got good structure, and they've not missed any of the resting orders. So that's really kind of key for this. So None of those were trades, but what we can look at is ES. Get rid of this. Don't need that. Right, so ignore the messy chart. I've got emus, fibs, I've got everything up on this, right? So turn off this, turn off VWAP, turn off some EMAs, and we'll leave this on, right? So close that. So what we were doing, and we were calling this out, probably too far back in futures. That's not futures. Right, yeah, it's probably too far back in the futures channel now to show you. But this morning, what we were looking at was this area up here. So what was this? They pulled inventory higher. You can see the inventory distributing in there. If you want to really get into it, it's Wyckoff distribution. We've got the retest of the highs here. So we went short off here, which VPOC had moved up to. Ignoring this RTH volume, this was a lot smaller. This was filling in the gaps. So this was VPOC up here. We failed VPOC on the Wyckoff test and we dropped. And where did we drop to? We dropped to the low volume nodes. So we bounced once here. You can see we bounced, we failed, came back down, and we're looking for this area here. So I drew this the day before, or the morning before this whole move happened, and this was a scale point. We ripped through it. We ripped down to these low volume nodes here, and the bottom of this low volume node here. So we defended this one. Bills defended this one. They gave up the ghost in other ones. So this was our full sell point, and we cut down here in this node. So we'll draw that in there, right? So that was our sell, and our buy was here. So obviously that is a pretty monumental trade in terms of ES. So you're looking at 20s, down to like 86 or so. So it's a pretty damn huge trade. And that was all just because we can see what's happening. Obviously, but we're scaling in this point and this point, and we're scaling on priority VPOC, which is here, and we're scaling down here as well. But the full trade went the whole way down. And why we were looking at this point here and why this box was in, because we have VPOC here and we've got a structural defect right below it. So if we've got fair value here and we've got a loss in structure beneath it, we're expecting this loss in structure to get filled in. And that's why on the way back up, we filled in the structure, we came back down, we filled in the rest of this structure here, we started filling in the gap with the orders, we bounced back up, we then went through this, could we take out those resting orders, because obviously people were playing the node, they were trying to defend the node, they lost it on that peak, went back higher, we have a structural defect here, we put the line in here, you can see we started to fail around here. So we peaked over, pulled the liquidity, fell back under, retested, came back up, filled some more liquidity, ripped through. Where did we rip to? We ripped to this area of low volume in here. And then we failed back down, ripped through all of them. I think that was when the news came out. And then we bounced again off of this low volume area, which now acts as demand, right? So we could have mapped out almost the whole day trading just volume profile. Obviously that was not what we were doing the whole time. We were using EMU's fibs, we were looking at the candles, patterns, whatever. But that's what you need to start looking at. Definitely works on your really liquid objects, tickers, especially the markets and the indices and the coin and stuff. I don't want to see someone being like, oh Broda, I try to do a fixed range on NXTD, which is a big as load of shit, and tell me it's not working, right? So that'll be why. It's not liquid, no one's actually playing it, there's no institutional money in it. So yeah, so a wee summary for you guys. So look at the fixed range. So what we're going to map out is our low volume nodes, our high volume nodes, our VPOC, which should already be mapped out for you. Your value area high and value area low should already be mapped out for you, so let you know. They should be on your thing. If they're not, change the settings, get them on it. So you want this and this. You can draw boxes around them if you want to look like you do supply and demand, but have your boxes work a lot better than these idiots that just draw squares. So try and cover, obviously you've got 2 little nodes like this, and you've got like 3 big nodes, 4 big nodes. Make that your demand, right? Oh, that's a funky pencil, rainbow pencil. So draw your box around this. Hey, look at that rainbow pencil. Yeah, so what we'd expect price to obviously do is flush through, or test, be defended, flush through. Once it gets into this volume area, we expect it to test the bottom of it, pick up orders in here, which is everyone's stops that have been taken out. So take out the stops, come in here, pick up the liquidity, go back up, retest this, come back down. Like we saw in F-cell. So those are what you need to draw on your lines, on your charts. Draw squares instead of just drawing lines like I did. I'm just getting used to drawing lines because I can see it on the volume profile. I just thought I'd explain it. Again, with your session, I forgot the word there, what I was doing. You're wanting your VPOC, your low volume nodes. You can see your high volume nodes because it's on the same day, so low volume node areas. Okay, so the only, what else did we go through? Liquidity and structures and imbalances, right? So there's our D profile here. So in fact, because most of you are not short sellers, we'll do it the other way around. Right, so we've had our pattern and we've bought and we moved, right? So that's our play, and everyone goes, oh, I'll put my stop under here, under the pattern. I'll go under this prior low, right? So you've got stops under the prior low and you've got stops under the pattern. If we come back down, most people expect we'll bounce here. We probably would bounce here. Where we expect a better bounce is ripping under these stops, take out the liquidity. If we're on a good stock and there's a reason we're going up, we take out this bottom liquidity and then we move up and then we retest and go. And that's how you end up with these inverse head and shoulders, right? So this under here is smart money. This is where they're playing. And why do they play like that? It's simple, right? So if they, I just ruined my drawing a wee bit. Right, so I'm trying to put that back in, come on. Right, so if we're buying in here, right, and we've got our stops, oh, it's getting a bit laggy. We've got our stops here. Why would they want to stop us out to get their orders, which are here? Right, so it's a pretty simple answer, to be honest, right? So if they take out these stops, then these buyers no longer have their position. To get their trades, they need a lot of liquidity, so they force these to sell off in their stops, and they absorb all those sells. So now who has all the shares? Is smart money down here. So when smart money then push it back up into this pattern or out of the pattern and then retest it here, who buys back here is retail, the people that have just been stopped. And why do they do that? FOMO. They go, oh no, I've been stopped, my stop was too narrow, I need to get back in, it's going to move. So they buy, and then smart money distributes into them. And what happens when they're FOMO chasing up here is that we end up with this imbalance, and that's why that's a really bad drawing. That's why our volume profile looks like this on days like this. So this is retail FOMO buying, and this is smart money, and smart money accumulating and distributing, right? And that is why so many people generally put their stops too close, especially on things like swings and futures and such, because they don't want to get stopped. But sometimes if you give yourself a little bit wiggle room, you won't actually get stopped. But you want to see that strong demand. Wrong colour. You want to see that strong demand. This is them absorbing, and then they move it, and that's retail purchasing, and then wrong colour again, and then that's them starting to sell, right? Comprende, volume profile. Probably a decent amount of stuff I've missed off this, but obviously everything is on my Twitter and on MTA because I'm there to teach. Also, don't try and work out what my name is, please. Thanks.